Calamos Investments ringing the closing bell today in honor of its new fund offerings, one of which says it offers investors 100% downside protection from Bitcoin's volatility. Here to explain is Calamos Investments President John Koudounis. Good to see you.
Good to see you, Scott.
Congratulations. You're ringing the bell today, which is always a great honor here at the New York Stock Exchange. Let's start on the Bitcoin thing.
Okay.
100% downside protected Bitcoin. How does that work?
Yeah, so we're really proud of the team at Calamos. We've been able to make the first 100% protected Bitcoin. And the way it works is if you buy the Bitcoin, it's in the ETF form, so it's very liquid, and you get a percent of the cap rate. So if Bitcoin goes up, like the last one we do in a series, we had one come out just last week, you get 10% of the upside. And if it falls to negative territory, Scott, you're fine as long as you keep it for the year, and it rolls over. And it's been really, really hot. And we've also adjusted. We've done 90% protected, where you get north of 24%. You get 80% protected, and those are in the low 40s percent of the upside. So it's a great way for people, some of the older people that are afraid of the volatility. Look, Bitcoin has been the number one performing asset in the last 14 years. There's no denying that.
It's probably been one of the most volatile, too.
It's also been one of the, so that's why we invented this product, so to bring to market for people that do not want to have that volatility. They can be in this product, know that their principal is protected, and not have to deal with the ups and downs that Bitcoin has had.
The timing speaks to your continued bullishness about Bitcoin, I would assume. Is that right?
Well, we are, but I think it's more of a product for people to look. The United States, I think there's about 14% of the population has bought Bitcoin. The world is even less. I think 6% is the number. So there's a lot of room for growth in the product. And as it becomes more of a mainstream, and you see this administration really, really being advocates of it, I think this is a good entry point, an on-ramp for people that are a little bit less risk averse. At Calamos, we're risk managers. We've been doing this for close to 50 years, and this is just another type of product that we're launching. We did S&P, NASDAQ, Russell in a similar manner, and then when legislation was approved, we were able to do Bitcoin as well.
You also launched with JP Morgan what you say is the first ever auto-callable product. Well, yes. I'm not embarrassed to tell you, I've never heard of that before I was preparing for this segment. What is that? An auto-callable product? What do our viewers and your potential investors in it need to know? All
right, so the auto-callable product is it's part of the structured product world, and there's actually been 100 billion last year issued of this type of product, or close to 200 in total structured product world. And in the past, you had to have a minimum 250,000 buy-in, and we're launching the first ETF where you can do that. Now, what is this auto-callable? JP Morgan is doing the swaps for us, so they're partnering us with the swaps. And McCube has done the index for us, which is very, very important part of the analysis. So what it is, it's a product. Think of it as a bond that gives you a coupon. It pays out monthly. We launched it. It's 14.7%. You get is the coupon. So you're getting that on a monthly basis. And the only thing that you're worried about is if the market falls, the equity market falls more than 40%, then it might eat into some of your coupon and then possibly your principal, depending on when it strikes. But we diversify the product by having over 52 all auto-callable notes. So every Friday, they match up and see if that Friday the market's above, a decline of 40%. It keeps going. And
it sounds like you're trying to, but you're also trying to, as you said at the top, you're trying to give access to certain types of products that typically weren't available to everyday investors, only the super high net worth.
This is what they call democratization of products, right, Scott? And so we've done a lot of this at Calamos, and this is a lot of wealthy, really high net worth individuals, billionaires, use all the callables in their portfolios. and they get charged a lot of money because they're structured notes to do this, points at a time, where us is just a few basis points, and it's what the advisors call the easy button. You don't have to issue all the time because we did it versus an index and the swap, and it's all contained in the CTF.
All right.